Imagine sitting at a heavy oak desk in a dimly lit room. A cup of steaming tea rests beside you, and before you lies your ledger, or in modern terms, your banking app. Every number you see, every balance, every account, exists not because gold or silver physically backs it, but because millions of people collectively believe it does. It exists because trust, fragile and fleeting, holds it together. And that, as Mervyn King explains in The End of, begins with a deceptively simple concept. Modern banking is a kind of alchemy. Banks take deposits, money you believe is instantly accessible, and lend it out long-term, often in complex, intertwined ways. It's like promising your neighbor a loaf of bread while having already sold it to someone else. This system works, as long as no one panics. But the moment doubt spreads, the illusion collapses. He paints vivid historical pictures to illustrate this. Consider 14th century Florence, home to powerful banking families like the Bardi and Peruzzi. They lent enormous sums to kings and princes, trusting that promises would be kept. When those rulers defaulted, entire banks collapsed. Trade froze, and ordinary citizens, people who thought their money was safe, were ruined. History, King emphasizes, is full of these patterns. Crisis is not an anomaly. It is baked into the structure of banking itself. Fast forward to the modern era, the 2008 financial crisis. King describes it as a slow-motion disaster. On the surface, banks seemed calm, stock markets fluctuated modestly, and media reassured the public that everything was fine. Beneath that calm, however, risk had been stacked invisibly. Complex financial instruments, derivatives, and credit default swaps created a web so intricate that no one fully understood it, not even those who built it. When the shock came, trust evaporated. Liquidity dried up, banks failed. Governments intervened with unprecedented bailouts. The swans on the lake, elegant and serene, were sinking, and the water had turned red. King is careful to point out that 2008 was not an anomaly. It was inevitable. The system was designed for simplicity in a world that had grown immensely complex. Globalization, instant communication, interlinked financial institutions, and high-frequency trading created a perfect storm for fragility. Crises are predictable, not random. Human psychology, fear, greed, overconfidence, denial, is the engine behind these recurring failures. Markets don't fail because math fails. They fail because trust fails. To understand this fragility, King takes us back to the origins of money. Gold coins, silver bars, and tangible assets had intrinsic value. Each coin could be weighed, measured, and verified. People understood what they held. Trust was embedded in metal itself, not merely in belief. But physical money limited trade, was heavy to transport, and slowed economic expansion. Societies invented promises. First paper money, then deposits, then digital currency. Efficiency increased, but fragility came with it. Money became trust, and trust can vanish overnight. The human element is central. Crises are as much about emotion as they are about economics. Panic spreads faster than reason. Optimism blinds people to risk. Fear turns minor setbacks into systemic collapse. King emphasizes that the lessons of history repeat themselves, from Renaissance Florence to post-revolutionary France, to the 2008 crisis, and even to Lebanon's banking collapse in 2019 to 2021. Each event tells the same story. Blind faith in the system often leads to ruin. Skepticism, preparation, and diversification allow survival. King introduces a practical solution: the pawnbroker for all seasons. Just as a traditional pawnbroker lends only against valuable collateral, central banks should provide liquidity responsibly, requiring proof of real value. This stabilizes the system, discourages reckless risk, and prevents crises from spiraling. It is not punitive, it is preventative. King's proposal is grounded in reality. Finance cannot be magic. Stability must be engineered, not hoped for. The book is filled with historical examples illustrating this principle. Post-revolutionary France experienced hyperinflation as paper money became worthless. Ordinary citizens suffered, while those holding tangible assets survived. During the American Civil War, both the Union and the Confederacy printed vast amounts of unbacked currency. Inflation skyrocketed, wages collapsed, and ordinary families struggled to survive. In Asia, the 1997 currency crisis wiped out savings for millions, while investors with access to foreign assets survived. More recently in Lebanon, banks froze deposits, leaving people's life savings inaccessible. Across centuries, the same patterns emerge. Systems fail, institutions falter, but tangible value and foresight endure. Debt, King notes, is a key factor in fragility. Countries borrow in foreign currencies. Governments overextend themselves, and ordinary citizens pay the consequences. Debt is not merely numbers. It is a chain linking individuals, institutions, and nations in ways that can strangle entire economies. Central banks have tools to mitigate risk, but these tools are temporary. Printing money or cutting interest rates may postpone crises, but do not solve the underlying structural problems. Without fundamental reform, history warns, crises will recur. King stresses that modern finance is as much about human imagination as it is about numbers. Money only functions because we collectively believe it does. Remove that trust, and even vast reserves evaporate. The 2008 crisis, the Florentine bank failures, post-revolutionary hyperinflation, all illustrate the same principle. Finance relies on belief, and belief, unlike gold, can vanish overnight. Yet, the End of Alchemy is not purely a book of warnings. King offers guidance, solutions, and hope. Those who anticipate risk, diversify holdings, and value tangible assets not only survive crises, they often prosper. History is cruel, but also instructive. It rewards preparation and punishes complacency. King emphasizes that crises are opportunities for the observant and disciplined, offering lessons that can be applied to personal finance, national policy, and global economic strategy. Central banks, he explains, are limited in scope. While tools like liquidity injections, interest rate adjustments, and quantitative easing stabilize the surface, they do not address underlying fragility. True resilience requires structural reform, discipline, and accountability. The pawnbroker for all seasons model is one approach. It aligns incentives, enforces prudent lending, and prevents risk from cascading unchecked through the system. King also examines human behavior in detail. Finance is not abstract. It is social, psychological, and deeply human. Markets move not only on facts, but on perception, rumor, and emotion. Optimism and fear drive booms and busts. Even the best designed systems can fail if human behavior undermines them. The book is as much a study of psychology as it is of economics. Throughout the End of Alchemy, King emphasizes preparation. Survival depends on understanding fragility, recognizing illusions, and valuing tangible assets. It depends on questioning assumptions that others take for granted. Monetary Archivist, through this exploration, reminds viewers and readers that history is not a dusty story. It is a blueprint for survival in the financial world. King closes with a powerful message. Alchemy in banking is ending. Money is trust. Finance is human. Systems are fragile, but knowledge, foresight, and discipline endure. Understanding these principles allows us to navigate uncertainty, protect wealth, and seize opportunity when others falter. Crises will come. The question is whether you will be prepared or left holding illusions. For anyone curious about finance, history, or human behavior, The End of Alchemy is essential reading. It teaches us to see through illusions, recognize risk, and prepare for uncertainty. And for those following Monetary Archivist, it reinforces our core message. History has the answers for survival in a world where money, trust, and belief are never guaranteed. Because while alchemy may be ending, human ingenuity, awareness, and discipline remain the most reliable tools we have. And that is the ultimate lesson. Understand the past, anticipate the future, and never take trust for granted.